Cell phones in the air. Yeah. I open up my eyes to the world and I see got a lot of guns and they aiming at me. As they say, I love the church, I don't care about the streets. That's so far from the truth, why they lying on me? I'm where I'm supposed to be, trying to play my role. Staying faithful to the gospel, seen a lot of growth. Been a lot of testimonies all around the globe. And I ain't bragging, that's from rapping about what God has spoke. There used to be a gift, now it's criticized. If my heart is for the church, why is this a crime? Whatever happened to the days when the minstrel's pride was speaking life into their body, I'm a bit surprised. Better recognize, church got my eyes on the streets. We're looking at the world with their eyes on me. What they talking about, huh? Jesus is for everybody, huh? Jesus is for everybody. Boy, got my eyes on the rich, looking at the trap boys and the life of a prince. What they talking about, huh? Jesus is for everybody, huh? Jesus is for everybody. My eyes to the church and I see them automatic weapons and they aiming at me. Say I'm preaching to the choir, people dying in the streets. You be preaching to them too if you seen them lately. No doubt it's in my mind, it's making perfect sense. Am I doing something wrong, talking to the saints? I'm just giving it my all and I'm in my own skin while I'm building up the body, walking in His grace. But why?
We on now, let respect us cause we on now. Money up, run the whole town, don't we? This power money can't slow down, money won't slow down. Ooh, we doing a lot, how we got on top.
What up, what up, what up, what up? It's your partner. We back. We back, guys. We back for another one. I'm a little bit late today, so forgive me, guys. I had a long day today, but I'm here, guys. I told you I'd be right here, and y'all, we talking about it. We talking about that crypto, baby. We talking about, y'all saw what we talking about today. We talking about crypto, how real estate, right? Crypto has been leveraged to reset the debt, and one of the catalysts here is real estate, which is a $52 trillion sector right now, guys, in the real estate sector. Now, they won't do anything with the debt at all because of the fact that, guys, to be honest with you guys, we owe too much money. Okay, we owe too much money. Be honest with you, we owe too much money. They're saying that we owe $40 trillion in debt. That's actually a lie. It's higher than that. We actually owe, guys, around like 200 plus trillion. This is the reason why. And that $40 trillion figure, Medicare, Medicaid, and the Social Security are not in that figure. That's called off balance sheet accounting. If you and I did that, we would go to jail for fraud. Okay? Just keep it to 1,000 with you guys. That's what's going on, guys. We got that there. So I want you guys to come on in real fast. We're going to dive into this. Yesterday, we talked about, right, how Trump was using, right, the Iran war to reset the entire financial market system globally. And I got a lot of feedback, and everybody loved the presentation. So I said, you know what? Let me go ahead and get it in on the real estate side, guys, and how really the digitizing the dollar is how they're going to reset the debt. And both Democrats and the Republicans both are in lockstep with the digitizing of the dollar. It's called the CDBC, right? CBDC, sorry, that Central Banking Digital Currency. Central Banking Digital Currency, CBDC. That's what it's called, okay? So whenever you hear about tokenization, which we're going to talk about today, they're talking about the digital dollar. So do me a favor, guys. If you like what you're hearing, guys, do me a favor, like, share, and subscribe this, and invite at least 2 people to this live. 2, because I'm going to get into the bag today when it comes to how the government's going to use real estate, lending in really, to unlock $52 trillion, right, in liquidity via cryptocurrency. I said it with my chest. I did. And I'm going to give you the receipts. I'll give you the receipts, all right? So, guys, let's dive into it. Let's do this real fast. Let's go back real quickly to what we talked about yesterday, all right? Real quickly. I'm going to be a little bit more. There we go. All right. Let's go back to our discussion tomorrow, yesterday. But we're going to revisit 2 videos because they line right into what we're talking about. Okay, we have to remember the past real quickly. All right, take a walk with me. All right, here is right how President Trump and his administration are trying to reset the debt. Now get this. Notice there is no counter argument or resistance from the Democrat side when it comes to this play. There's no resistance, no lawsuits, no nothing from libertarians, independents, and Democrats, and any Republicans. There's none, okay, on digitizing the dollar to reset the debt, which means they're all locked up. There's not even any judges at all that are against this. None. You're going to see why in a second, okay? All right, so here's our first video, guys. Let's just go through real fast. All right, here's our first video. All right, take a walk with me. Take a walk with me. Here we go. All right, take a walk with me. Here we go. Now, hold on one second. Let me get it right. Let me get it right. All right, y'all. Boom. Let's move real fast. All right, here is the video we saw yesterday, guys, real quickly, that talked about this whole thing. I want you guys to see this real quick, okay? Here we go. Here is a video talking about how Trump intentionally was trying to crash the market and the reasoning why. Pay attention to the debt portion, okay? If you're looking to get traditional thinking here, this ain't the live for you. But if you're looking to grow a little bit based on receipts, not my opinion, receipts, I'm open to being persuaded, okay? But let's dive into this real quickly, all right? Here we go. Here is a presentation that we saw yesterday of President Trump. President Trump right now intentionally trying to crash the markets, not only nationally, but globally, and the reasoning why he's doing it. Let's get into it. Here we go.
Trump crashed the markets on purpose, and the same people who made billions on the way down just started buying everything back. All year you watched stocks and gold bleed. Bitcoin cut in half to under 60,000. The media blamed the war and inflation, but it all traces back to one man Trump put inside the Fed, Kevin Warsh. The whole world expected rate cuts. Instead, he froze rates and let the markets drown. Why? America had trillions in debt to refinance, and it could not afford the interest anymore. But when markets crash, scared money runs into one place. U.S. Treasuries, yields drop, and the biggest debt pile in history suddenly became affordable again. The crash was never an accident. It was the payment plan, and your portfolio paid for it. But this week, the payment cleared. The war is over. Oil is collapsing, and the same man who froze the markets suddenly said inflation risks have come down. That is the switch. BlackRock, $11 trillion under management, herded and bought Bitcoin 5 days in a row while retail is still hiding. This is the moment in every cycle where fortunes quietly change hands. Insiders buy the bottom. The crowd buys the top. 4 months before the midterms, every light turns green exactly on schedule. The crash saved America's debt. The recovery is built to win the election. And for once, you are seeing the play before it finishes. Don't let fear decide for you. Follow Hano Crypto to be on the right side.
So again, what you guys see in there? You saw what? The market crashing intentionally, right? And the goal of that was to reset the debt, right? And when a market crashes, you get those that understand opportunity and those that they get scared. Scared money runs to what? Treasury bonds, treasury bills, and government bonds. That's where our debt is held at, right? Right? And what happens is, guess whose portfolio paid for that? Yours. What you mean, LaDale? Your retirement. Tomorrow we're going to your retirement tomorrow. Tomorrow we're talking about how this is affecting your retirement. Tomorrow. Same time, 5 o'clock. Oh, don't you worry. Tomorrow I'm gonna shock you. I'm gonna shock you with receipts. Receipts. Okay? So again, you see President Trump and his administration, right? What they're doing, intentionally crashing the market. Why? So that people can they know that the majority of the individuals will get scared money. And they run to treasury bills and government bonds, which is where our debt is held at. Right? Now, why would President Trump want to go into treasury bills and government bonds? Why? That's why debt is it. But why? What for? What for? And notice, guys, there's no resistance at all. There's none. No Democrat, no Libertarian, no Independent, or Rhino Republicans. None of them are at all said anything. No judges, no lawsuits, no nothing. Why is that? All right. So we got the foundation real fast. That's part one for foundation. Now keep walking with me. Walk with me. All right. Walk with me. Now, let's go to video number 2. Again, receipts. Now, the question before I play this is this here. Why would the Trump administration and all politicians want scared money to run to treasury bills and government bonds? That's the question. That's the question I want to focus on right here. Hey, we got the answer, baby. Here we go. Again, this right here, guys. This is going to shock you. All right, hold on 1 second. Boom, let's get switched over. Here we go. Now, here we go, guys. Let's dive into this real quickly. Here, this answers the question of why, right, President Trump and his administration and all politicians want scared money, i.e. your money, to run to treasury bills and government bonds. Wow, because they actually manufactured a market crash nationally and globally based on this Iran war. Here's the answer. Here we go. Let's get into it. Come on, get out the way. Hold on one second, guys. Boom. Here we go. Boom, here we go.
Trump is about to turn every smartphone on the planet into an American bank account, and it could trigger the greatest economic boom in American history. It's called a stablecoin, a digital dollar anyone on earth can hold with nothing but a phone, no bank required, and it moves across borders in seconds.
Right there, it moves across borders. What borders, LaDale? The U.S. borders. No banks involved. What? Hold on, wait a minute.
Here's how that makes America rich. By law, every stablecoin must be backed by real dollars and U.S. government
Right there.
debt.
Right there. Every stablecoin has to be backed by U.S. dollars, right? And or government debt. I'd say government debt. Okay, hold on.
So every person in Argentina, Nigeria, or Turkey who swaps their collapsing currency for digital dollars forces more American debt to get bought.
Stop right there. He mentioned 3 countries. It's really more than 3 countries, right? Because remember, it's borderless. It's going across borders, right? And you have other countries collapsing debt running to what? Government bonds, U.S. government bonds, and treasury bills. Not only your portfolio, but the global debt. Wait a minute. Now, why would he want that to happen? Let's keep going. Here we go. Let's keep going.
Automatically. Now scale that up. Billions of people holding dollars for the first time ever. That's the largest expansion of the dollar in history. America prints the money, the entire world lines up to hold it, and the debt gets funded by global demand instead of American taxpayers.
Stop right there. So now instead of the taxpayers being the only one holding the bag when it comes to government debt, because of the CDBC, right? CBDC, which is the digital dollar, it went from the U.S. taxpayer to globally. Because what the globe, remember, this was a manufactured crash not only nationally, but also internationally, globally. Hence the crashing of the other countries' dollars, and that scared money runs to what? Treasury bills and government bonds. Here we go.
Other countries export oil and cars. America is about to export money itself. That's the boom almost nobody sees coming. And it's already being signed into law. Follow us to understand what really moves the markets. Trump is about to turn every...
So again, guys, did you see it? Did you see it? Did you see it? Because I saw it. Trump manufactured a crash, right? That's the plan. Manufacture a market crash nationally and globally, right? It would create an opportunity. Only select people will see the opportunity, but people will get scared, not only from a U.S. taxpayer standpoint, also from a other countries' currency standpoint. People will get scared, right? And what happens is scared money runs to a safe place, which is what? Treasury bills and government bonds for the U.S. So therefore, what's happening is now, since stable coins, the digital dollar is now in place and it has to be cash, U.S. cash, and government debt behind that thing. What happens is now countries exchange their depreciating dollars of their currency for the U.S. strong dollar, right? Therefore, what's happening now is the U.S. can continue to print money, and instead of just the U.S. taxpayer holding the bag, right? Now it's globally. Therefore, resetting the debt, inflating it away, simply because they digitized banking. We got it? You see the plan? And there's no type of negative rhetoric from the media, Democrats, independents, libertarians, and Republicans. The entire elite class is cool with this. So much so, you're finna see who's now trying to leverage this digital play for the dollar into real estate. Let me give you 3 names, right? And you know them. BlackRock, Vanguard, State Street. The 3 entities that actually control the dollar. I'm sorry, control the marketplace. Forgive me. Just saying. All right, guys. So now we got it. We got it. All right, let's get to it now. Now let's now pivot over to real estate real fast. All right. Now let's bring in CNBC. And the title of this is called Crypto World, right? How tokenization, which just means that's just code or different word for blockchain or cryptocurrency or digital dollar. Okay, pick one. Could shake up the $52 trillion U.S. real estate market. Notice the amount, $52 trillion. Notice what they're saying we owe in debt, $40 trillion. You got it? Okay, let's bring it in real fast. Let's bring it in real quickly, guys. This is a good one. I've saw this one before, but it's very good. All right, we'll watch the beginning of this real quickly, and then what happened is once we do that, we'll be able to. Hold on one second, guys. That's not what I wanted. No. Let's do okay. Here we go. Here is no. It's not what I wanted. I'm sorry, guys. I'm trying to get me right. Okay, let's see if this works. See if that works. That's better. All right, here we go, guys. Let's dive into this real quickly. Let's get into it. Here we go.
This is New York City's East Village, and I'm standing in front of 13 East and West. In 2018, it was Manhattan's first property to try a new approach to ownership. Fractions of the condo, tokenized on a blockchain. The effort was put together by companies Propeller and Fluidity as an alternative way to finance the development. The move was lauded by the Web3 industry as a way to take the technology mainstream, but the project ultimately failed.
A lot of people still don't really understand, oh, what are the tokens? What does that actually mean? And it's just sort of a novel concept.
Despite that setback, there are companies operating today that believe the technology can change how we interact with real estate. They're on a mission to let homeowners more easily tap into the value of their homes, or even just let people buy real estate in a time when many feel it's harder than ever to purchase property.
So again, we see what's going on. Is the goal is to assist buyers in buying real estate. All right, that's the goal. Again, if we're in a fractionally reserved system, okay, we're going to look lower. We're in a fractional reserve system. So if money is not flowing, right, people go broke. All right, we're in a fractional reserve system. Okay, understand the structure of our banking system. All right, now let's get back to it, y'all. Here we go. Let's get to it.
The key benefits of investing into fractional real estate are you don't need the $100,000, the $200,000, the $300,000 to get started in it.
This can take form in concepts like tokenized rental properties.
We turn houses into tokens that anyone can trade.
On Lofty, a rental property marketplace, investors are able to spend as little as around $50 for one fraction of a given property. The properties are owned by an LLC, which is governed by a decentralized autonomous organization, or DAO. This means that all investors get to vote on key issues, like selecting a property manager.
Everyone is an active manager. And so as a result of that, legally speaking, the DAO itself on paper has no manager. It's managed by a smart contract on the blockchain. Essentially, any decision to operate or manage the property is decided collectively by the group voting.
There's always governance votes, whether it's to make repairs, change property managers, there's always a vote that comes forward.
Vesta Equity is a platform taking a different approach.
So again, guys, real quickly, come back to me real fast. So again, what we are seeing is this here. We are seeing something that we're seeing something, guys, right now that when it comes to this approach, they're trying to use real estate in a way that operates like a stock, right? Via digitizing the real estate via tokens to be able to exchange those tokens on the blockchain, stable coins. We watched that when it came to Trump, right? Therefore, allowing for people to move their resources via tokenization to real estate. And for $50, as this example had said, you can actually own a piece of real estate, just like you own a piece of Apple, of Wells Fargo, of Target, of Walmart. You see T-Mobile, AT&T, Verizon. Do you see the structure here? They basically are restructuring. Instead, you have to come up with $100,000 down payment. You come up with for $50. Which one can you do? $50 or $100,000? Let's listen to this Vesta Equity real fast. See what they're doing real quickly, and see how this actually works. Here goes. Let's get to it.
Homeowners can sell a portion of their home equity to an investor by tokenizing what's called a home equity sharing agreement. This lets the homeowner get cash by selling the token, and the investor can make money through future appreciation of the property, which raises the value of the token.
If you're a homeowner and you've paid off a mortgage and spent your entire life paying off a mortgage, you need to access that equity again. Why is it that you have to go back into debt? So what we've created is a solution whereby the homeowner can tokenize their asset, access whatever amount of equity they want to access, and then through our marketplace, we partner them with investors who want to invest in that asset.
Homeowners can tap into their home equity by selling a token representing a portion of that equity. Vesta says this lets the homeowner access the value of their home without borrowing money like they would in a home equity loan or line of credit. The agreement also protects the investor by preventing the homeowner from selling below market value.
The homeowner maintains.
Now, do you see, guys, the play here? The play here, guys, is very simple. What they are doing is they are directly competing, right? Directly competing with the legacy banks. Well, what are legacy banks? Wells Fargo, JP Morgan Chase, Bank of America, Citigroup, PNC, just to name a few. This is a direct attack financially, come from a competition standpoint, to say if you have equity, instead of you getting a home equity loan, more debt, just go ahead and turn your house into a stock via tokenization and just sell pieces of it so you can get the cash you need, right, without having to add more debt to the home. That is, and then these companies are saying we actually have access to the investors that would actually want to do that. And investors on this platform may only need $50 to buy a piece. Do you see how that can unlock $52 trillion in real estate value? We got it? All right. So that's CNBC, guys. A great explanation, guys. Again, write this down. Write this down. All right. Now, is this truly happening right now? That was great. Is it truly happening right now? Well, again, let's go back to CNBC, right? Let's write to CNBC, because money has to go somewhere. It has to go somewhere, right? It has to. In order for this market crash to be able to help people out, right? From a government perspective, it has to go somewhere. So let's dive into it. CNBC again, talking about this. Here we go.
And welcome back to Worldwide Exchange. Blockchain technology has already disrupted the financial services and other industries out there, offering ways to tokenize assets and speed up transactions. The real estate market is also dipping its toes into the blockchain pool. It started in residential, but it's now quickly moving into commercial. Our Diana Bullock joins us now with much more in this week's Property Play. Diana, good morning.
Good morning.
And before he gets going, guys, let me give this here from an experience standpoint. The commercial space is bigger than the residential space. I'm saying it again. The commercial real estate is bigger than the residential. So it's already in the retail space, residential. Now it's going into commercial. Do you see? And who's leading it? Wall Street. Again, the big boys. BlackRock, Vanguard, State Street. Say to it. Here we go.
Frank, earlier this year, Fannie Mae and Freddie Mac were ordered to count a borrower's cryptocurrency holdings as assets to qualify for a loan. Some lenders like Propi are already doing crypto-backed mortgages for both residential and commercial property loans. I spoke with Tony Giordano, a crypto and blockchain disruptor in the real estate space, about that evolution.
If somebody comes to me now and says, I want to buy a house using Bitcoin, my question is why? Why on earth would you trade an asset that's going to go up 20 more times than that house will in the next 20 years? So now you have all of these new private equity firms giving you a loan against your Bitcoin asset so you don't have to get rid of it, and now you can just go buy the house traditionally.
So did you hear what you said, guys? This is a guy that's actually doing it, right? Actively lending on this. He said, instead of you selling your Bitcoin, which is knowing what you have to do, right, or your cryptocurrency, just leverage that at a 50% LTV, because they give you a 50% LTV, right, on your crypto valuation, right? And use that money to go out and buy real estate. So what is happening is, because of the market crash, right? What's happening here is, because money is flocking to treasury bills and government bonds, and the Trump administration, with the collaboration of all politicians and the elites, have not unlocked a digitized valuation there, right, to where they can continue to print money and just put that money on the blockchain or on digital wise, right, for them to be able to expand the money base, right? Now what's happening is that they need a place for this money to go. Real estate, which is probably the biggest industry most likely in the U.S. economy. This is my opinion. I may be wrong. I'm open to being corrected, but it's one of the biggest. I'll be corrected. One of the biggest industries. If money is not moving in a currency-based system, If it's stagnant, you'll go broke. You got it? Again, walk with me. Walk with me. Iran war, market crash, scared money runs over to Treasury bills and government bonds. Right? The government cannot continue to print more money, right? Now what happens is here what happens. Boom, all of a sudden now it goes into real estate. And get this was happening, guys, began happening really under the Biden administration. Via FedNow, which was a direct competition for Cash App and Venmo. Trump just came in and accelerated it. We got it? We on one. All right, let's get to it. Now, let's see, here we go.
Even more important, Giordano says, is real estate moving to the blockchain. A recent report from Deloitte said industry players now realize that blockchain-based smart contracts can play a much larger role in CRE, potentially transforming core CRE operations such as property transactions, purchase, sale, financing, leasing, and management.
What?
I don't see how the entire real estate industry will not be on the blockchain within 10 years. It's the most secure platform and technology to do it. So 10 years, I'd be surprised if it takes 10 years.
Because it saves money?
It saves money, it saves time, everything is instantaneous.
Now, some companies are already tokenizing real estate assets in order to sell them in pieces, sort of like CMBS, commercial mortgage-backed securities. Some are putting land records onto the blockchain to protect properties from being stolen or altered by cyber criminals. Now, there's much more on this in today's Property Play newsletter and video.
So again, guys, as you guys can see, and you're welcome to scan the QR code, no problem. CNBC does a really good job of talking about this. But what I'm saying is this here, guys. Do you see the play in real estate? Do we see it? Do we see it? All right, we see it. Now, again, all things real estate. Now, let's go back here real fast. All right, here we go. Now we see that because of the market crash, scared money runs to treasury bonds and treasury bills and government bonds. Not only from the U.S. taxpayer, but also from other foreign currencies. Boom, there it is. Now what happens is the government has successfully moved that debt onto the blockchain, or to a digital type of blockchain there. Boom, there it is. Via stable coin. Right? Boom, there it is. And the money has to go somewhere. Real estate. Here we go. Here we go. That's real estate. It's right there. Now you begin to see the big boys: BlackRock, Blackstone, BlackRock, Vanguard, State Street. Now what they do is now they are lending accurately on real estate via cryptocurrency. So much so they're saying, hold on to your crypto. We'll leverage your current crypto, get 50% LTV on that via loan. You go out and buy the real estate. Or number two, what they're doing is if you are a seller, you can now turn your real estate into a stock-like transaction, therefore tokenize it, or allow people to buy pieces or shares of that real estate, right? To where you don't need to go out and get a loan, a home equity loan or line of credit on your property. Just sell shares of your real estate to raise capital that you actually need. Instead of investing in $100,000 to buy real estate, all they need is $50. Do you see how they opened this up? Come on. This ain't hard to understand. Come on. You see it. All right, no problem. Now let's keep going, guys. We almost there, baby. Now let's bring in our boys from Binance. Binance is who they normally use, right, as an explanation of how this thing works. You saw it on CNBC. Let's bring another expert in to explain how this is currently, and from a scalability standpoint, it's going to work. Okay, let's bring in Binance real quickly, guys, and see how they explained it. I think they did a good job of explaining it, guys. So let's bring it in real fast. Let's go. Here is Binance explaining how this is going to work. Let's get it in. Let's go.
What if you could buy a fraction of a skyscraper in New York, or a piece of a famous painting?
You see it?
Or trade stocks and other assets 24/7 without a broker? That's the idea.
You see it? You see it? Did you see it? I don't think you saw it. let's run it back. Run it back real fast. Indulge me for a second. Let's just run it back. You see it? Let's get into it. They covered 3 things. Here we go. Let's get to it. Oh, what's going on here? Hold on. Here we go. Let's go.
What if you could buy a fraction of a skyscraper in New York? Or a piece of a famous painting? Or trade stocks and other assets 24/7 without a broker? That's the idea behind tokenized assets and why some of the biggest names in finance are paying attention. I'm Bola, back here in the Binance studios, and today we're talking about tokenized assets, what they are, how they work, and why they could change what it really means to own something.
Yeah.
The concept is actually quite simple.
Yeah.
A tokenized asset is a digital representation of something that already exists. That could be a stock, a bond, or even real estate. What matters is what it represents. Ownership.
Stop right there. She said, what she said, guys? She said, a stock, a bond, and real estate. Let's go to that bond. Now, where's the scared money running to again? Treasury bills and government bonds. Receipts. And she covered paintings, right? She covered paintings. She covered real estate. She covered stocks and bonds. Let's go a little deeper. What if it was cars? We know commercial real estate. Do you see how they can turn anything into a share-like transaction? Do you see how this allows the government to expand the money base, therefore inflating the debt away? You see it? Okay, let's get into it. Yeah, almost done. Let's go. Let's get to it. Here we go.
But instead of your right to ownership being buried in a bank's database or stored on paper, it's recorded on a blockchain as a digital certificate.
Yeah.
And that's where the advantages come in. Once it's on chain, that certificate theoretically becomes far more flexible. You could split it into fractions so more people can invest.
More.
You can transfer it in minutes instead of waiting days for settlement.
Wow.
And you can even program it with smart contracts so things like dividends, interest, or rental income are paid out automatically.
What you say?
If you spent any time in crypto, you may have already used a form of tokenized assets without even realizing it. Stablecoins like USDT or USDC are digital tokens that represent a real US dollar, backed by reserves like cash or government bonds.
Wait, what?
They're essentially tokenized dollars, and they've become one of the most widely used applications of blockchain today.
Wow.
In theory, almost any asset could be tokenized. But right now, most of the excitement is around financial products like treasuries, funds, and stocks.
Yes, sir.
Take tokenized stocks. Normally, if you want to buy shares in a company, you go through a broker. After settlement, you hold the stock directly. But you can only trade during market hours, and access can be limited depending on where you live. A tokenized stock works differently. It's a blockchain-based token that mirrors the value of the real stock, usually backed one-to-one by actual shares held by custodian.
Wow.
So when you buy a tokenized stock, you're not buying the stock itself. The real share stays with the custodian. What you hold is a digital token that represents the rights linked to ownership of that share. That structure makes it far more flexible. And you can trade it 24/7 from different parts of the world and even buy just a fraction of a share. And this isn't just theory. BlackRock launched a tokenized US Treasury fund in 2024. And by 2025, its tokenized shares had grown to nearly $3 billion.
What you say?
Qualified traders can even use them as collateral on some crypto platforms. That's just one example of how tokenization has moved from being an idea to becoming real financial infrastructure. It's changing the way people own, trade, and access assets. And the space is growing fast. McKinsey projects the total market could reach $4 to $5 trillion by 2030. While it's so early, the potential is clear. Tokenized assets aren't about creating brand new things to own. They're about taking the assets we already know and giving them a digital upgrade, making them faster to move, easier to access, and ready for a 24/7 world.
Guys, I think that she killed that. She killed that presentation. Wonderful presentation. She did phenomenal. She really did. Wonderful presentation. So again, guys, I'm just saying. What's going on with my music? Can you guys hear the music at all playing, guys, behind me? Or is it just me? It's not there? I don't know. I don't know what's going on. Ah, there we go. There you go. All right, here we go. All right, guys. Now, guys, do you see it? Did you see it? And guess who was in there early? Oh, Black Rock boy, right there, baby. Right there. And then we talked about yesterday and earlier today. The big three, Black Rock, State Street, and Vanguard. They up in that thing. You see how they're tokenizing everything to get scared money off the sidelines? Because it's already attached to the treasury bills and government bonds. It's a dollar for dollar type of transaction. This is what they're planning. It's already here. It's here. It's here, guys. It is here. Now, last one, guys. Is there an investor right now that we know that's doing this now? The answer is yes. And you know him very well. Let's invite them into the conversation to talk about this. Take a walk with me. All right? Take a walk with me. Here is who I consider one of the GOATs of real estate. I call him Uncle G. Some folks know him as G Money. I call him Uncle G, but his name is Grant Cardone. He is one of the GOATs in real estate, right? I consider him and another guy by the name of Pace Morby, another guy by Jack Modem, as the three GOATs. Really, my two GOATs, because I know Pace Morby and more about them, I would say, and Grant Cardone. These guys are the GOATs. Okay, but let's bring in Grant Cardone. And he's active doing this now. Okay? But again, receipts.
Crypto experts aren't quite ready to call the prolonged drop in Bitcoin's price the new crypto winter, but as performance gets close to hypothermic levels, Standard Chartered's digital asset analyst warning that Bitcoin could fall to 50,000 by year end. Okay, 50,000 by year end. Right now, it's at 68,131. The bank backed up that forecast by slashing its price target to 100,000 from 150,000 as a result of worsening macro conditions and investors trading it out for what? Gold, whatever, heading for the hills. But one real estate investor is heading full throttle into the frigid winds, buffeting Bitcoin. He's Grant Cardone, the CEO of Cardone Capital, the real estate mogul, crypto investor, and widely followed business influencer. Has 5 million Instagram followers, 3 million YouTube subscribers. He is now melding concrete with crypto. We're talking real estate mixed with crypto. Great to have you on the show. I can't tell you, I tweeted out that you were going to be on, and so many of the followers on X that I have were, yay, Grant. Can't wait to hear what Grant has to say.
Well, thank you for having me, and I hope the people that follow me, I hope that you didn't get too much heat for having me on your show, because a lot of these old crypto hands are going to say, if Grant Cardone's getting into the game, real estate guy, then it must be the top for Bitcoin, which I don't think it is.
Well, and one of them said, don't throw any softballs at his head, Liz. You got to go right at him. So let's go for it. There are just a few finite asset classes out there, and real estate and crypto are two of them. How are you mixing the two, and why?
Here we go.
Well, look, I've been buying real estate for 40 years, multifamily real estate that cash flows, institutional quality, great assets, and ran across Bitcoin about 13 years ago and looked at the possibility of combining the two, one that's visible, the other that's invisible, one that's very, very liquid, being Bitcoin, almost too liquid sometimes, and the other that's very illiquid, one that cash flows and one that doesn't. So it's like two two financial vehicles that are opposites. You know, they say opposites attract, Liz. So we looked at putting these together. I'm not a gambler. I'm a very conservative investor. I like cash flow. I love real estate. But I don't like that real estate is very heavy. It's very slow to move. It's very, very expensive to fix. Bitcoin costs nothing to fix. There's no roofs, no plumbing, no HVAC, no evictions, no property taxes. So we combine the two. We have the largest real estate Bitcoin hybrid in the world. We've done 5 different projects just last year, and I expect to be the largest real estate Bitcoin hybrid that will challenge the old REIT structures.
Well, how does that work? Because, and I see you've got the 10X Space Coast Bitcoin Fund. That combines something like 300 apartments in Melbourne, Florida, with 15 million worth of Bitcoin. You've got a Miami River Fund, similar, South Florida. These are all in Florida, Boca Raton Fund. Tell me, and then you say that you pay out dividends for investors who put in as little as $100. When you say you're melding them, explain what that means.
Well, the $100 is that's not true. That's false. Okay. So we have, like the Bitcoin Melbourne project, we did it was an $88 million project. I bought the asset for $72 million. We added $15 million of Bitcoin to the purchase. It was an $88 million cost to build asset that we stole the asset. So we buy best in class institutional quality asset below replacement costs. Rather than just getting cheap real estate or what we believe is real estate, you know, that's on sale or a discount, we just stack the difference, Liz, with Bitcoin. Rather than just buying cheap real estate, we end up with a great deal on the real estate, add the Bitcoin, we pay cash for both. And then that property cash flows, I think at about 4.5% with, as you mentioned, $15 million of Bitcoin to purchase.
How can you pay out dividends when Bitcoin is crashing, which is what we've seen since October?
Because we paid cash for the Bitcoin. We paid cash for the real estate. We have about $3.5 million worth of positive cash flow on the real estate. And we use the dividends from the real estate to actually buy more Bitcoin.
Wow.
So we end up with 2 assets, not 1 asset, and the cash flow.
So
this is going to exponentially increase the valuation, not only for Grant, but also as investors, because of the fact, depending on if the investors are involved on the crypto side, right? Guys, because crypto's valuation, because again, the digitized dollar is going to severely, most likely outpace real estate. It is from a short-term standpoint. And because he bought it via cash, dollar for dollar. There we go. What happens, guys? It's very simple. He can afford to pay those dividends. Doesn't that smell just like what Binance just talked about? Do you see it? Do you see how? You know what? Walk with me again. You don't believe me. You don't believe. It's all good. Let's go back to that first video, guys. Right? Let's go back to that first video. Right? All right, let's go back to the first video. Here we go. Let's go back to the first video, because remember, this is all about a couple things here. Here we go. Let's go back to the first video real fast. Just one more time for the focus back row. Remember the foundation here and how Grant and these other companies are doing this on the blockchain, therefore unlocking $52 trillion worth of real estate valuation. Oh, here goes.
Trump crashed the markets on purpose. And the same people who made billions on the way down just started buying everything back. All year you watched stocks and gold bleed. Bitcoin cut in half to under 60,000.
Just heard that.
The media blamed the war and inflation. But it all traces back to one man Trump put inside the Fed, Kevin Warsh. The whole world expected rate cuts. Instead, he froze rates and let the markets drown.
For sure.
Why? America had trillions in debt to refinance. and it could not afford the interest anymore.
Correct.
But when markets crash,
Yes, sir.
scared money runs into one place.
Where?
U.S. Treasuries.
What you say?
Yields drop,
Huh?
and the biggest debt pile in history suddenly became affordable again.
What?
The crash was never an accident.
Never.
It was the payment plan.
Yes, it was.
And your portfolio paid for it.
It did.
But this week, the payment cleared.
Yes, it
the
did.
war is over.
It's over.
Oil is collapsing.
Yep.
And the same man who froze the markets suddenly said inflation risks have come down.
Yeah.
That is the switch. BlackRock, $11 trillion under management, heard it and bought Bitcoin 5 days in a row while retail is still hiding. This is the moment in every cycle where fortunes quietly change hands. Insiders buy the bottom. The crowd buys the top. 4 months before the midterms, every light turns green exactly on schedule. The crash saved America's debt. The recovery is built to win the election. And for once, you are seeing the play before it finishes. Don't let fear decide for you. Follow Hano Crypto to be on the right side of.
As you can see, guys. You see it? Keep walking. Keep walking with me. All right. Keep walking with me. All right. We saw that. We saw BlackRock. We saw that. Now, let's go to the second video real fast. Right? So we got we again, receipts. Receipts. All right. Receipts. All right, here we go. Receipts. Here we go. You got a second video, guys, and then I'll put it all in the bow, and then we'll be done for the day. All right, y'all. Appreciate your love. Here's a second video, guys. Just walk with me. Here we go. Let's get into it.
Trump is about to turn every smartphone on the planet into an American bank account.
Yeah.
And it could trigger the greatest economic boom in American history.
Yes.
It's called a stable coin.
That's what it was.
A digital dollar anyone on earth can hold with nothing but a
What?
phone.
Nope.
No bank
this.
required.
No bank.
And it moves across borders in seconds.
No borders.
Here's how that makes America
Okay.
rich. By law, every stable coin
Yep.
must be backed by real dollars and U.S. government
Yes,
debt.
sir.
So every person in Argentina,
Other countries.
Nigeria, or Turkey
Yes.
who swaps their collapsing currency
Come on.
for digital
Okay.
dollars forces more American debt to get bought
Yes,
automatically.
sir. Yes,
Now
sir.
scale that up. Billions of people holding dollars for the first time ever.
Uh-huh.
That's the largest expansion of the dollar in history.
Yeah.
America prints the money. The
print it.
entire world lines up to hold it.
Yeah.
And the debt gets funded by global demand
Yeah.
instead of American taxpayers.
Yeah.
Other countries export oil and cars. America is about to export money itself.
Yes, sir.
That's the boom almost nobody sees coming.
Uh-huh.
And it's already being signed into law.
Yeah.
Follow us to understand what really moves the markets. Trump.
You see it? You see it? You see it? It was just part of the plan. It's part of the plan, guys. And those that are ready to take advantage of the plan will benefit. Are you ready for the plan? Are you ready for it? Because whether you know it or not, we're already here. The digital dollar is here. And notice, there is no counter argument or refusal from independents, Republicans, Democrats, libertarians, and communists and socialists, or the elites, or any judge. Why? Because this is part of the plan. And real estate is a natural industry to go into. It's natural. It's very simple to see. And those that are ready to take advantage of this. Now, notice in the second video, the first video talked about how wealth was exchanged. Money is never destroyed. It's merely transferred. And who do you keep on seeing every time when it comes to a money transfer? One company, BlackRock. What do they know that you don't know? What do they know? Stop using the excuse of, well, they're the elites. They are. Stop using the excuse of, well, you know, I didn't know. Now you know. Now you know. 1 second, you guys. Got a text message. You see it? Do you see it? It's right there. Do you see it? It is right there. You got it? So what can you do to take advantage of this? What can you do? Here's what I'm going to tell everybody. Digital banking is the play. You have to learn about how banking works. Because the reason why BlackRock, Vanguard, and State Street all right now active, and they're always in front of the masses, is for one reason. They understand how banking works. Do you? Now, what if there's a chance for you to actually gain information to know how it works so that you can make up the best decision for you and your family? This is the reason why. This is the reason why I put together this here, okay, for you to be able to understand how this works. It is free information. Digital banking is the new play. And for those that are on Instagram, I got you. Don't worry about it. I know yesterday people were saying that they could not scan it. No problem. I got you. Don't worry about it. I got you guys. Don't worry about it. Give me 1 second, Instagram. I got you, baby. Don't you worry about it. I got you. I got you. Hold on. I got you. Oh, okay. My bad, y'all. Forgive me, guys. Forgive me. All right, here we go. All right. There you go, Instagram. For those who didn't see it, confirm. There it is. Instagram, that's on there for your Instagram. You can click on that little link there. Guys, scan on the QR code or go on the show. If you're on like a Rumble or YouTube or any other platform, there's a link below in the show notes. Also, click on it. Go learn this free information. It is free for you to learn. Go look at it. Learn something. There is an opportunity for you to be the Blackstone or BlackRock of your family, because you will understand how banking works. Okay? Scan on the QR code. Scan on it. Scan on it. It's right there. Go look at it. It's for free. Let me give you an example real fast. When I learned this just really it kind of shook me a little bit in a good way. Did you know that the average American uses their debit and or credit card 30 plus times a month? There's a fee that's actually being paid, right? What if you could actually make a nickel each time someone actually does that? Let's go a little deeper. Money sitting in an account. What if you're actually making a revenue from money sitting in the account? That's how BlackRock does it. What about you? That opportunity is here now. Okay? It's here now. It's right there. We got it? We on one? This banking industry is $16.6 trillion of banking power. It's here. We got it? Cool. Well, guys, man, I hope I added some value for you today. I said I would try to do this more frequently on a daily basis because I get asked a lot of questions concerning how to benefit from the market of real estate, private equity, And this digital banking thing has me very intrigued. I'm actively involved in this now. I am, because I like being in the banking business. This makes more sense to me. If making a share of credit card payments, hello. Someone's just living their life, right? Paying their bills, making a piece of each transaction. Hello. How do you think BlackRock got so big? They understood banking. Do you? The Goldman Sachs, the Lehman Brothers, right? Well, Lehman Brothers, not Lehman Brothers, but with the Goldman Sachs and Vanguard and State Street. It's right there, guys. It is right there. It's free information. Go look at it. If it works best for you, great. If not, it's all good, baby. But you can't say that you didn't know. It's here, and it's free information for you to take a look at and vet yourself. But that's it, guys. That's all I have for today. God bless you. I hope I added some value to you. And if you need anything from me, I'm a DM away, and it's me responding, not a bot. All right. So, anyways, guys, God bless you. If you're on Rumble, guys, you're welcome to DM me there, or YouTube. You can DM me there, guys. I hope I added some value to you today. Tomorrow, we will be talking about how this play here, right? This manufactured market crash from a national standpoint and global standpoint to reset the financial markets and to reset the debt for America is affecting your retirement. We're going there tomorrow. We are going there tomorrow. You got it? Good. All right, y'all. Well, God bless you guys. I hope you have a good Sunday. I'm feeling eat some dinner. And I have to get in the gym and work out. All right, guys. God bless you. I'll see you next time. All right, y'all. Hold on one second, guys. Get rid of this real fast. All right, y'all. See you next time. God bless you guys. All right, y'all. Peace.
Right now, someone in your phone contacts is buying a coffee. Someone else just got a notification that their monthly subscription renewed. The average person taps their card more than 30 times a month and auto-pays nearly a dozen subscriptions. These are regular habits that lead to daily and monthly spending. But what if every single one of those microtransactions paid you? Introducing Dingo Blue, a powerful financial technology platform built for the way people actually live today. Powered by the ACN direct sales infrastructure, Dingo Blue gives your network a frictionless mobile account. 16.6 trillion. That's how much money is sitting in checking and savings accounts across the United States right now. Now, imagine getting paid when your customers simply do what they're already doing every day. When they keep a balance in their savings and checking accounts, you earn every single month a small percentage of what is in those accounts. When they tap their card for groceries, you earn. When they fill up their tank, pay their bills, grab a coffee, book a trip, or shop online, you earn. Every swipe, every purchase, every month. Every transaction creates another powerful opportunity to earn income through everyday purchases people are already making. Bills, gas, online checkouts, every swipe creates another opportunity. Dingo Blue aggregates those micro percentages, building a compounding residual pipeline directly to you. You acquire the customer once. You monetize their lifestyle indefinitely. No legacy fees. Total transparency. Banking services are provided securely by our licensed FDIC-insured partner bank, giving your network institutional-grade protection. Stop funding someone else's success. Start creating your own. Tap into your pre-approved marketing toolkit, connect with your network, and launch your Dingo Blue engine now.
To learn more about this banking-as-a-service digital banking business model and to see how it can potentially benefit you financially to build wealth, click on the link below, scan the QR code, or DM me the word bank. I'll send you the details. Stay blessed and holla at your button.